Okay, so Nvidia's rise has been, well, nothing short of historic. It's become one of the most valuable companies on the entire planet. But what if the AI boom that's fueling all this growth isn't quite what it seems? We're about to dive into a claim that could totally change how you see the entire tech industry.
So let's just get right to it. What if the incredible, off-the-charts demand for their chips isn't actually real? What if it's all just a giant self-fueling money loop designed to inflate revenues and, of course, stock prices? That is the explosive accusation we are unpacking right now.
You know, the people who believe in this theory, they claim that some of the biggest names in technology are caught in this circular flow of cash. It's all designed to look like organic growth, but it might be something else entirely. So here's the breakdown, step by step, of how this whole thing is supposed to work.
So according to the theory, it starts here. Step 1, Nvidia invests in AI startups, a great example being Elon Musk's xAI. Then, step 2, those very same startups turn around and use that investment money to buy Nvidia's AI chips. Meanwhile, you've got step 3, where a giant like Microsoft is pouring billions into OpenAI. Then comes step 4. OpenAI commits to spending billions on Microsoft's cloud services. And for that cloud to actually run all that AI, you guessed it. Step 5, Microsoft has to buy absolutely massive amounts of Nvidia chips. You see the circle? The money just goes round and round.
Now, a theory that wild needs some kind of evidence, right? So where do its supporters tell us to look? Well, they point directly at Nvidia's own financial reports, basically claiming the numbers just don't add up. The first and maybe biggest red flag they point to is this number, $33.4 billion. That's in what's called accounts receivable, which is really just a fancy term for unpaid customer bills. The theory argues that, sure, Nvidia is booking these as sales, but the actual cash, it isn't in the bank. The customers have bought the chips, but they allegedly haven't paid for them yet. And then there's this, a nearly 32% jump in unsold inventory in just one quarter. And that kind of creates a huge contradiction, doesn't it? On one hand, you have management saying demand is insane, and they literally can't make chips fast enough. So why would their inventory be piling up so dramatically? And that brings us to a really key financial metric. How much of a company's reported profit is actually converted into hard cash? The theory claims that while healthy chip makers convert over 95%, Nvidia is only converting 75%. And to some analysts, a number like that is a serious distress signal. This quote right here really sums up the whole accusation. The idea is that the very same dollars are just circling through a handful of companies and getting counted as new revenue over and over again. It creates this, massive bubble of perceived growth. So the big question is any of this actually true? So now let's do our due diligence. Let's look at the other side of the argument and actually fact-check these claims using official data, stuff from public SEC filings. Okay, first up, that $33.4 billion in unpaid bills. What's the reality here? Well, Nvidia's sales grew an incredible 89% year over year. And when you're experiencing that kind of insane growth, your accounts receivable, the money you're owed, it's naturally going to skyrocket right along with it. It's not a sign of non-payment, it's a direct result of absolutely explosive growth. And what about that stockpile of chips? Well, when demand is truly off the charts and you have this huge pipeline of future orders, you have to build up inventory just to be able to fulfill them. It's not a sign that chips aren't selling, it's that Nvidia is stockpiling all the components they need to meet the coming wave of orders they've already locked in. And that whole distress level cash flow thing? Well, the data shows that claim is just flat out wrong. According to their filings, Nvidia's actual profit-to-cash conversion is sitting around 86%. That's not a distress signal at all. In fact, it's a perfectly healthy number, and it's very much in line with their main competitors, like AMD and TSMC. So while the whole money loop theory seems to kind of fall apart when you look closely, that doesn't mean there are zero risks in the AI market. Far from it. There are some very real concerns that savvy investors are keeping a close eye on. First off, the valuations are just sky high, and that always carries risk. Second, customer concentration is a really big deal. A huge chunk of their sales goes to just a few massive cloud companies. And third, we've seen some significant profit-taking from insiders. I'm talking about high-profile investors like Peter Thiel and SoftBank, who sold off billions in stock. Now, that's not a sign of fraud, but it is a signal that some of the smartest people in the room might think the stock is getting close to its peak.
And all of this leaves us with the ultimate question, doesn't it? The fraud claims seem to be more smoke than fire, but the valid concerns about the hype and the valuation, those are very real. So what are we looking at here? Is the AI boom a truly resilient technological breakthrough that's going to change our world forever? Or is it the biggest market bubble we've ever seen, just waiting to pop? What do you think?